Let's talk about what looks good in your eyes right now. Your stock picks. Drikus, what are you choosing?
Reinet, locally listed and is listed in Amsterdam as well. Recently sold British American Tobacco. They've got about 1.5 billion euros in cash on the balance sheet at the moment. That's a large chunk of the balance sheet. Also got a lot of pension assets. It's already trading at about a 40% discount. If you take away the cash, so you're only looking at what you're actually paying for the assets, you get about a 55% discount. That's a lot of upside, even if it just trades to a 20 or 30% discount from here. I think they're going to buy back shares, or they already are. At the moment, that creates more value, or there will be some special dividend or some kind of asset purchase going along the way. Even if they don't, definitely in a difficult economic environment, I do think that 1.5 billion in cash provides you with a lot of optionality. So I like the counter. I think it's an asset play. I think something's going to happen. Mr. Rupert is trying to unlock value in his other investment vehicles as well, like Remgro. They did it with RMH, where they were indirect shareholder basically. So I do think there's some kind of value unlock coming for shareholders, and it's trading at a very deep discount to the real portfolio.
All right, Bright, where are you finding value today?
I'm looking at Applovin currently. So this is basically a company that benefits from network effects of app developers coming together into their platform. This company obviously provides the platform, the software to develop these apps, and obviously the marketing and making sure that all these apps that are developed by this richness of skills and resources happen. So if you actually on any app store, chances are 60 to 70% of the time, the app you're looking for comes from this Applovin.
Okay.
I want to call the sandbox, Applovin sandbox.
Okay.
So it's a great company, US listed. It's almost about $100 billion market cap. Currently down about, I want to say just over 50%, so call it 51, 52% from their highs of February. So giving us an opportunity for growth here. I mean, I don't foresee individuals, stopping using their favorite apps, especially people in, fitness and people who are addicted to their fitness apps, etc. And one of the biggest announcements in the past 2 weeks is that Garmin is going to stop for example, individuals from using their apps for free. They're also coming into the market and saying, you know what, we think you should subscribe for X amount per month or X amount per year. So more and more apps are heading that direction, meaning that app developers are going to be able to have power to monetize their apps using similar business models. So I'm loving this company at these lower share prices. It still isn't super cheap, but it's really cheap as compared to where it was 2 months ago. So I like Applovin right now.
All right. Well, thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Drikus Combrinck from Capicraft and Bright Khumalo from Vestact. Up next, The Close. Stay watching.